Ladies and gentlemen, good day and welcome to Dhanuka Agritech Ltd Q2 and H1 FY26 earnings conference call, hosted by Antique Stock Broking Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahavar from Antique Stock Broking Ltd. Thank you, and over to you, sir.
Yeah, thank you, moderator. Good afternoon, everyone. I am pleased to host today's earnings call of Dhanuka Agritech. We have leadership team represented by Mr. N.K. Dhanuka, Chairman, Mr. Rahul Dhanuka, Managing Director, Mr. Harsh Dhanuka, Executive Director, and Mr. V.K. Bansal, CFO on the call. Without any delay, I would like to invite Mr. N.K. Dhanuka to start with opening comments, post which we will open the floor for Q&A. Thank you, and over to you, Dhanuka ji.
Thank you, Manish ji. Good afternoon, ladies and gentlemen. I am M.K. Dhanuka, Chairman of Dhanuka Agritech Ltd, and I welcome you all to the Q2 FY26 earning call. I have with me Mr. Rahul Dhanuka, Managing Director, Mr. Harsh Dhanuka, Executive Director, and Mr. V.K. Bansal, CFO of the company. On behalf of whole Dhanuka family, I would like to convey season's greetings to you, and I trust Diwali was a time of joy, family bonding for all of you. As you are aware, Dhanuka Agritech is a leading Indian agrochemical company. Dhanuka is working with the vision of transforming India through agriculture. We have a pan-India presence in all major states to reach out to more than 10 million farmers with our products and services. Dhanuka's key focus has been on introduction of novel chemistries and extensive product development, distinguishing us from the rest of the industry. With 4 manufacturing units and 41 warehouses across India, we cater to around 6,500 distributors and 80,000 retailers. Dhanuka has a strong sales and marketing team to promote and develop new products. Dhanuka, with 2 R&D laboratories, has world-class NABL accredited laboratories as well as an excellent team for new product registration and development. Dhanuka has international collaboration with 10 leading global agrochemical companies from Japan, US, and Europe, which helps us to introduce the latest technology in India. During this quarter, abnormal and uneven rainfall distribution led to significant crop losses in various states. Some regions experienced excessive rainfall, while others faced deficient showers, creating uneven soil moisture conditions. Crops in waterlogged areas suffered significant damage, reducing the application of agrochemicals. These conditions delayed harvesting and the application of crop protection product. Limited pest infestation due to heavy rain, washing of the pest, resulting in lower demand for agrochemical products from farmers. We are happy to inform you that we have received the registration certificate of iflufenoquin for indigenous manufacture under Section 9(3), duly approved by the Secretary CIB and RC for use in transplanted paddy for the control of leaf blast and net blast. This product is introduced in collaboration with Nippon Soda, Japan. We have also introduced a biostimulant by the name Verdure recently to enhance our nutrition portfolio. We are soon expecting clearance of our existing biostimulant products as per the new government guidelines, and then we will start the sales of the biostimulants also, which is being stopped by the government of India due to some regulations. Further, I would like to share that we have started trial production of second product from the Dahej plant. We expect this product to help us increase the revenue from the Dahej plant. Also, our sales of bifenthrin technical from the Dahej is on track and in line with our annual objective. Now moving on to financial performance for the last quarter, our revenue from operations stood at rupees 598.25 crores in Q2 of FY25-26 versus rupees 654.28 crores in Q2 of FY24-25. EBITDA stood at 136.73 crores in Q2 of FY25-26 versus rupees 159.58 crores in Q2 of FY24-25. Profit after tax stood at rupees 93.97 crores in Q2 of FY25-26 versus rupees 117.52 crores in Q2 of FY24-25. Zone share of turnover for Q2 of FY25-26. North India 30%, East India 13%, West India 24% and South Zone 33%. Product category wise share of turnover for Q2 FY25-26. Insecticide category 46%, fungicide 29%, herbicide only 9%. This is the herbicide category which has hit the top line of the company in this quarter to the maximum. And others is 16%. We consider ourselves responsible towards securing the farmers' welfare and preserving food security of the nation. We continue to strengthen our association with the agriculture universities, Krishi Vigyan Kendras and other critical institutions to impart knowledge and latest technology to the farmers. Thank you very much for your kind attention, and now we would like to open the forum to take the questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Darshita Shah from DSP Asset Managers. Please go ahead.
Yeah, hi, thank you so much for the opportunity. Hope I'm audible. My first question was regarding the second product that we are manufacturing at the Dahej plant. If you could share which product this is and what size are we expecting this to reach over the next few years?
Yeah, thanks, Darshita. This second product is difenoconazole, which we have started trial production and expecting to scale up as we stabilize this new product. The potential for this molecule we are right now restricting to India because for the international markets the cost from China is lower. So we are not planning to compete in the international markets. We believe for the Indian market the potential to be close to 200 metric tons.
Okay, got it. And for both bifenthrin and difenoconazole, the margins will be around, once the scale up is done, what kind of margins do you expect?
Similar margins that we are having right now. For both bifenthrin and difenoconazole, similar margins will be there.
Got it. And my second question was regarding the herbicide segment being hit the most, as Dhanuka ji mentioned. Was it specific to one product where we had excess inventory, or was it the entire segment altogether?
We faced this challenge of herbicide almost across the board for all our specialty herbicides in soybean, groundnut, cotton mostly. So there was this challenge. However, paddy herbicides and total weed killers, they did really well, in spite of the challenge, but specialty herbicides in major crops took a beating.
Got it. And was this more to do with the crop acreages being down or rainfall related issues there, or is it a more broader issue with respect to farmers shifting away from specialty products and going, using more of generic products considering the lower prices?
So farmer has not shifted to generic products. That's not the case. What has happened is that in the earlier application window, it was a dry period in Q1, and subsequent application window, it did not stop raining. So farmer did not get an opportunity to apply the herbicides in cotton, soybean, groundnut, these crops.
Got it.
Farmer has certainly not shifted to generic choices. Farmer makes a decision based upon the weed profile and the right product. At Dhanuka, we are able to offer a spectrum of products, a choice of products within herbicide segment also to the farmer, depending upon the profile of weeds each farmer has. However, the climatic situation has not allowed an application window.
Got it. That's clear. Thanks. And just one last question regarding sales returns. Have we taken all the impact of all the sales returns that we had to in the second quarter? And is the channel, how filled is the channel now specifically for Dhanuka, like for Dhanuka's products?
Right. So talking about Dhanuka, we enjoy a very deep and intense relationship with our channel, and we work very closely with them in terms of rotating the unsellable inventory and giving them fresh product of what is going to come next. So we clean out our sales return as soon as possible and as fast as permitted, and then load the channel with what is coming next.
Got it. Okay. That was very clear. Thanks. Thanks a lot. I'll get back in the queue.
You're welcome.
Thank you. Before we take the next question, a reminder to all, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. The next question is from the line of Viraj from Sample. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just a couple of questions. First is, can you give the breakup of domestic B2C sales and sales from B2B business, Dahej and industrial in the quarter, both in those sales and EBITDA?
You see, the Dahej sale is not very significant. It is around 22 crore of Dahej in terms of Dahej sale. And in terms of EBITDA, there is a nominal EBITDA loss around 46 lakhs of Dahej in this quarter.
Sorry, how much?
46 lakhs.
Okay, got it. So, sir, we also, I think last quarter we talked about us consolidating their sales. So one, there would be a royalty income, which is typically we report as a part of revenue. And second, we would also be consolidating the business, the P&L, in different phases during the year. So for the quarter gone by, was there any consolidation played out in the numbers for two Bayer products? And similarly, if you can give the royalty income figures.
Yeah, Q2 royalty income was not significant, is around 4.5 crore. And in terms of the consolidation of the revenue, so in terms of export, nothing has happened so far now in Q2. But yes, for the indigenous business Melodio, it is happened from the Q1. It is happening from the Q1.
Okay. So of the, say, roughly 200 crore sales for both the products of Bayer, how much will be the India business?
India, you are expecting around 30 crore.
Okay, got it. Now, see, so if I adjust the B2B sales of 22 crores and even adjust for the royalty income, I think we've seen a degrowth of roughly around 12% in the domestic B2C piece. So just trying to understand, one, was it largely the impact of herbicide portfolio in this, or something on the ban on the bio products, the plant growth nutrients? Between the two, which was a larger factor in terms of the hit on the sales?
The larger part of herbicide, but yes, there is an impact of the biostimulant as well.
How much would that be, sir?
Biostimulant portion, we can say in the quarter two is around 2.5% to 3%.
Of the sales. So roughly around, say, 20 crores or hit on PS. Hit on sales.
More than 20.
Okay. And this, should we expect a normalized sales starting Q3, or, it will take some time for us to normalize?
No. The impact of biostimulant will be in Q3 and Q4 as well, but bigger impact was in Q2.
Okay. Got it. Now, just last question I had, and I'm just trying to understand, see, bio products typically carry a higher margin structure, and similarly has been the case with herbicide. But if you look at our own contribution margins, gross margins in this quarter, it has largely been flat for us, right?
Yes.
I'm just trying to understand, because even the new product contribution has also been kind of flattish, Q on Q, and both year on year. So I'm just trying to understand, what is driving this better margin?
So you see, herbicide, we have a big range of molecules. There are certain molecules we are having average margin, some is good and some is low. So in the case of herbicide, many molecules which are having less margin, their sale is badly impacted this time.
Okay. Got it. Just one last question, Stephen. Yeah.
Sorry to interrupt, Viraj.
Try come back in.
Follow-up question.
Sure.
Yeah. Thank you. The next question is from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Thanks for the opportunity. So first question, again, on the Bayer set of products. So earlier we had indicated that this year royalty income could be in the range of 15 crores and overall sales would be in the range of 100 crores. So where are we now after 1H, and do we stick to the same guidance, or we'll have to revise it based on the first half performance? Thank you.
Yeah. Thank you, Mr. Rohit. The revenue other than the India market has not started coming in as yet, as we are taking some longer time to establish the distributors and the registration transfers in various countries. So we will continue to get the royalty because Bayer is continuing the business operations on behalf of Dhanuka. So the royalty figures will get revised upwards. Already we have received till H1 13.5 crores royalty, and for the rest of the year there will be more, and the revenue will have to be revised downwards.
So are we expecting any revenue this year, or probably a large part of it will be recognized only in next year?
Large part will be realized in the next year. In this year, we are expecting very few countries to be transferred.
Perfect. That helps. Second question, in terms of the EBITDA margins, given that earlier also we had indicated that there will be some slippage during this year because last year was extraordinary. So do we stick to that guidance, and hopefully this year again, the same guidance remains of 100 basis points decline, or probably there will be more pronounced decline based on the first half performance?
Yeah, in terms of EBITDA, you see, earlier we were giving the basically 100 basis decline in the GP margin. Now we are revising. So now we are seeing our gross margin will remain same as per the actuals of 24-25. So now we are expecting the impact on EBITDA margin approx 100 basis points.
Sure. That is helpful. And last question, in terms of the hedge scalability. So we were expecting that FY26 we will be able to break even, and you also alluded second quarter there was marginal loss. So are we on track to achieve the revenue number as well as the break even or slightly better profitability? Thank you.
Revenue we are on track for this year, but EBITDA profitability, we last call we mentioned FY27, so we are trying for FY27. Right now it is challenging looking at the current environment, but we are still trying for FY27 EBITDA positive. Revenue for the FY26, we are on target on our annual projections.
Sure. That's helpful. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Archit Joshi from Nuvama Wealth. Please go ahead.
Hi, good evening, gentlemen, and thanks for the opportunity. So first question, I think in the PPT we have mentioned that you're expecting a flattish revenue performance in FY26. And given that first half has also been flattish, but the expectation for second half, given that the moisture content will be quite good, coupled with very good levels of water availability, should this be a more conservative way to look at the second half?
So second half would be relatively better, of course, because of good moisture in the soil, good water in the reservoirs, and the commitment to grow the agriculture sector by the government also. Yet, October has not done well as a carry forward of Kharif and as opening of Rabi. So with that, I think so we are well placed in terms of our initial forecast of H2, and I think so that's how it will be. October rainfalls and then add to it the impact of recent cyclone Montha that has really pushed forward the positive impact that Rabi should have started giving by now.
Understood. So this judgment is basis what we are seeing in October, despite the macros in India still being very favorable. Is that right?
Macros are absolutely favorable. That is one thing. And this judgment is not only based on the October situation, but the judgment is also based upon the change in the micro factors of the farmer's economy in short term. So, for example, Maharashtra soybean is still playing below MSP, and due to heavy rainfall, there has been crop damages in Andhra, Telangana, some parts of Maharashtra, a large patch of Punjab. All this is going to impact, in a way, giving Rabi a slow start or a delayed start, which could also probably impact farmers' investment sentiment in short term.
Sure, sir. Got it. Sir, I have one more question on our longer-term strategy, maybe, given that we have hopefully two products that we'll be manufacturing. I think, always wanted to have some sort of partnership or an arrangement where we could utilize these assets in the age in the form of contract manufacturing or something of that sort. But I think over the last 3 years, I don't think any company in India, at least from a CDMO perspective, has been able to generate a decent ROE or has been able to grow that well. Does our strategy still hold intact that we will keep scouting for such products or try to deepen our relationship with the Japanese guys that we've been working with for over decades? And should that translate to any material opportunity? So, given the industry dynamics, do we still wish to pursue that? If you may answer that. Thank you.
Thank you for that question. Yes, we truly believe that India has a manufacturing opportunity, especially for chemicals, and within chemicals, agrochemicals is a bright and very lucrative opportunity. As we know, especially in Europe, US, Japan, all these locations, any new investments are very challenging. So a lot of manufacturing is already coming to India. Dhanuka has not been able to capitalize on such opportunities coming till now, but we are in constant communication with our partners. There are some green shoots which are visible, some discussions which are going on, and we are hopeful that in future we'll be converting some of these opportunities into business results.
Sure, sir. One last one, if I may squeeze in. The Bayer arrangement that we have had, I don't think that exactly falls under the gambit of, doing any toll manufacturing or contract manufacturing. So such kind of opportunities also would be welcome, given that I think the margin profile of these two generic products was a little tad lower than, what generally companies make in CMO or CDMO. Would those also be evaluated in the future? That would be my last question, and thank you.
We are not closed to such opportunities in the future. We can explore depending on what kind of opportunity comes our way. In this, yes, contract manufacturing is not there, but definitely we will be manufacturing at least one of the products in Dahej in the future.
Sure, thank you. That's it from me. All the best.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants in the conference, kindly limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. The next question is from the line of Prashant Biyani from Elara Securities. Please go ahead.
Yeah, thank you for the opportunity. Sir, with a recent round of cyclone on the eastern coast, have we heard of any crop damages which can lead to kind of seed shortages that we saw around 2 years back?
So crop damages are certainly there in terms of not only on the eastern side, earlier in Punjab also. Yet, am I audible?
Yes.
I am. Right. So we have seen now the seed is grown, of course, on the eastern side of Andhra and Telangana. So there could be some impact. Yet, as of now, we have not heard of any seed production damage or the impact, which is on the eastern side, yet away from the coast. So more about it probably later.
And sir, start of Rabi has probably been soft all across, or any specific pockets you were referring to earlier?
See, it has rained excessively in Punjab, in Haryana, in Rajasthan, where Rabi would have started early, as compared to rest of the country. It starts with north. So yeah, it has been as of now soft and slow in terms of Rabi starting and Rabi linked investments starting.
Sir, just lastly, typically crops grown in north, primarily wheat and all, if there is continuous drizzle or drizzle in pockets, say maybe in some week or so, due to intermittent La Nina formation, would those kind of rainfall be negative for the crop quality?
It really depends upon when it is happening. So, any rainfall after the sowing is like really, really beneficial to the north crops. And any rains almost for 30-40 days will only bring cheers to the farmer in the wheat belt. So, in the mustard belt, in the gram belt, which is the Bengal gram. So, all this is after sowing. If it's raining, no harm. But when it rained in October, when it was the peak of paddy harvesting, harvested paddy in the fields, ready to harvest paddy, mandis full with tea. So all that was like really difficult and challenging for the farmer, which has slowed down the harvesting activity, which has slowed down the cleaning the field activity, which will delay the payment rotation and cycles. So all that is, kind of pushing the Rabi forward.
Sure, sir. Thank you so much for your time.
You're welcome.
Thank you. The next question is from the line of Himanshu Upadhyay from Streetfort Investment Managers. Please go ahead.
Yeah, hi. Good evening. I had a question. At the point of the 2 brands acquisition from Bayer, we had thought of getting one product manufactured in India. What is the progress here, and by when do we think we can start the manufacturing?
Yeah, so out of the 2 products, Iprovalicar, we are planning to manufacture in India, and this will start in FY27.
Okay. Okay. And second question is slightly broader in term. In last 5-6 years, we have been working on two ventures, okay, or two efforts. One is backward integration and getting more backward integrated. And second is acquisitions like Bayer's or brand and to grow our exports business. What is the thought process on evaluating opportunities now after both these two steps and having seen tested some time in the market? What will be our strategy, and are we still thinking of acquiring brands, or you think it is still time to make a clear judgment? And also on the backward integration part, where are we in that whole journey?
Well, we are in a growing market. Sorry, I missed your last point.
No, so where are we in our thought process now on both these things?
Right. So we are in a growing market, and these are all growth opportunities, which we are trying to capitalize. Yes, all these opportunities, as you would appreciate, are relatively having a long gestation period. So that goes with that. We have not only a debt-free balance sheet, we have a significantly strong balance sheet, which positions us well in terms of continuing to explore backward integration as well as acquisition opportunities. So while we are not going crazy with that, we are also not averse to a good deal on the horizon.
And are we getting such deals more, or what is the thought process? How is it?
So these are two different questions. Yeah, two different questions. Are we getting such deals? Well, may I ask you to refer some good ones to me? And the thought process is, if we get a good one, we are open to explore.
Okay. Yeah, thank you then.
You're welcome.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Sanjay K, an individual investor. Please go ahead.
Hello, good evening. Am I audible?
Yes, you are audible. Good evening.
Yeah, this is my question. Like, I'm not expert in agriculture, but what I'm seeing that there is a lot of impact or changes into the seasons because of the extended monsoon. And Kharif would have probably the sowing should have ended and harvesting should have started. But because of the extended rain, are we seeing that the Kharif is getting extended or it's kind of getting merged into Rabi, and the whole season is getting shifted, shifting, and it will be even Rabi will be shifting a little bit 1 or 2 months down the line, and how that will be impacting Q3 and Q4 for the company?
Right. You are a surprise entrant and a welcome one to the call as an individual investor. Really appreciate you being here and asking this question, which certainly doesn't appear like not knowing agriculture. You really do understand agriculture is what I can get from your question. Yet I'll make an attempt to what I know. We would kind of peg end of Kharif region by region as harvesting completes. So we can say that for farmer, Kharif is over when harvesting is over. In many parts, because of October rains, harvesting is delayed. So yes, Kharif is delayed. Second part is Rabi. So we can say Rabi has started when farmer is getting into sowing. So some parts, because harvesting is not yet complete, sowing has not yet started, Kharif is not yet over, and Rabi has not yet started. So yes, that is how this window of October is playing out, especially in North India, in the wheat belt, in the Bengal gram belt, in the mustard belt. That's how it's playing out. In some parts of South India, Maharashtra and south of India also, the recent cyclone has impacted ongoing crop itself, where the maturity and the harvesting would have come sometime in November. So there the impact assessment will come in over next few days for us to understand how much is the negative impact and what is the positive impact of these rains. As of now, October business has not happened, and hopefully it has moved to November.
Sure. So does that mean that usually whatever business happens in November and December, because of this delayed thing, the business will be better because the harvesting will be happening delayed and something delayed in November and December. So it is possible.
Yes.
I mean, is it possible that
Yes.
the business will be
It
better
is
in
possible. Yes, it is possible that November, December is unusually better.
Okay. All right. Thank you very much, and wishing you all the best.
Thank you.
Thank you. The next question is from the line of Siddharth Kadekar from Equirus. Please go ahead.
Hi, sir. So first question is on acquisitions. Are we evaluating FMC's India business by any chance? And could you throw some light with FMC's exiting the India business? What kind of opportunities does it open up for players like us?
Siddharth, you will not really want me to answer either in yes or no for the previous question, so I'll skip that. And I'll jump to the next one, which is the opportunity created by FMC's exit. So I'll first dwell upon why the exit could be happening and why entry or the exits happen. So the entry happens because India is a growing market. It offers still about 7 to 8% growth opportunity in agri-input industry, which keeps Dhanuka and everyone else probably excited. At Dhanuka, we have kind of registered almost a 7% CAGR over last 5 years, and we continue to bring in really new and powerful products in herbicide, fungicide, insecticide segments. And now we are bringing some good products for biostimulants also, which is driving the growth opportunity of the Indian agriculture. Yet, the market dynamics of managing a difficult season in terms of inventory as well as in terms of receivables is what decides your cash flow, what decides your working capital, the business prudence, ability to manage the downside is what would probably differentiate in terms of who will survive and who will not.
Correct. So just one more follow-up question on this. So in terms of FMC, is the brand value still very relevant in the market for someone to hire that brand, or the acquisition in your sense would be more for the newer products?
I would really have to resist answering that, Siddharth. Commenting on another organization is not a usual practice with Dhanuka.
Okay. So secondly, on difenoconazole, just wanted to know that in terms of sourcing the raw material, we would be sourcing the raw material from India, or we would be dependent on China on that? And how many steps are we going to be doing in India?
Yes, so the raw materials are being sourced from China. We are doing currently 4-step process. We are starting from N-4, and we are also evaluating developing some suppliers for the raw materials in India.
Got it. Thank you so much.
Thank you. The next question is from the line of Bhavya Gandhi from Dalal and Broacha Stock Broking Private Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, if you can just highlight I just missed out on the impact of biostimulant. If you can throw some light on what is the regulation, why are the biostimulants being banned or being requiring permissions for further sale and all that. And is there any substitute available to the farmers? If you can throw some light on the entire scenario of biostimulants, that will be great.
So the financial impact we shared already of the biostimulant in Q2 is slightly more than 20 crores.
Okay.
Yeah. And could you repeat the second part of the question?
And so what is the exact scenario of biostimulants? What is happening in the agrochemical ecosystem that biostimulants are not being allowed to sold? Or what is the future of biostimulants? If you can throw some light on that.
Right. No, it's not that biostimulants are not being allowed to sold. Biostimulants got out of a regulatory ambit before this happened. Almost 2 years back, Government of India tried to bring in a regulatory framework in terms of how to drive quality control, production and distribution of biostimulants. I think so this regulatory framework is relevant, yet it has been implemented A, suddenly, and B, without adequate consultation with the industry and other stakeholders. Still, moving forward, Government of India over last few months has opened up various biostimulants, more than 146 if I'm not wrong, with their quality control testing methodologies, and also sharing the list of laboratories where this biostimulants can now be tested for their quality. And the farmer cannot be taken for a ride by fly-by-night operators and unscrupulous elements. At Dhanuka, we also have applied for approval of our proprietary biostimulants with the regulator, and we are awaiting its clearances. The regulator, of course, has a long queue of few thousands. We are somewhere there in the queue, and we'll be launching our biostimulants as soon as we are getting those clearances. Having a regulatory framework is always good for organized and structured and ethical players like Dhanuka.
Got it, sir. So can we assume like it will be like a 3-4 quarter phenomena, and post that you'll be able to resume? And as you said, organized players will stand to benefit in the longer run. Is that the right understanding?
Absolutely, organized players stand to really gain and benefit in immediate terms, I would say.
Okay. And how soon can we expect the sales to start picking up?
Sorry.
I would assume, if not last quarter, first quarter next year for sure.
Got it. I'll get back in the queue, sir. Yes, sir.
Thank you.
Thank you. The next question is from the line of Riju from Antique Stock Broking. Please go ahead.
Yeah. Hi, sir. Few bookkeeping questions in terms of the Bayer products revenue in India market for the H1, if you could indicate that number.
Yeah, you see, Bayer molecule is around 25 CR in the first half of this financial year.
Okay. And sir, earlier we had stated that 100 crores kind of a revenue from the Bayer products in our book in FY26. So is this number we are going to frame that number, because most of the geographies are not, we have not got the registration. So how we should look at the total revenue number for these two products for the entire year?
You see, in the entire year, yes, you're right. We were expecting around 100 crore business which should come in the Dhanuka's books. But because of a little delay in the registration process, so export sale is not coming significantly in this financial year. So the number would be in the range of around 40 CR in this financial year probably.
40 CR including the India revenue that we have definitely 25 CR. Correct?
Yes.
And sir, in terms of the Rabi season that you have indicated the strong growth we are expecting for the Rabi season, but if I do the math in terms of 40 CR revenue from the Bayer product, I think we are expecting H2 run rate of only 1%. So if you could explain this, like the lower growth assumption for the H2 in our domestic business.
40 is for the whole year. For the Bayer products, what Bansalji mentioned, 40 crore revenue is for the whole year, not for H2.
Correct, sir. 40 whole year.
We have already done in H1, so H2 is only 15 crores from Bayer products.
Yes.
Okay, and sir, if I calculate this thing, so I think our H2 run rate for the domestic business, excluding H1 and including Dahej business, revenue should come roughly around 890, maybe 900 crores. If I look at your guidance of maintaining the 25 revenue numbers or the flat growth for the 25. So our H2 revenue should be around 900 crores, and it is somehow flattish compared to the last year H2 number. So in spite of a strong Rabi season perspective, and we are expecting a bit of slower growth in the H2. So if you could explain that thing.
You see, when we are saying our annual number would be flattish, so you are seeing in the H1 there is a negative of around 21 crore, right? So if we recover that, so there we are expecting around 2 to 3% growth in the H2. Is broadly impacted. You see, October was not absolutely good in the in this second half of this financial year, because of which the second half growth is impacted significantly. So we are expecting ki bare minimum should be 2 to 3% growth in the H2, so that our annual number will be almost flattish.
Understood, sir. Understood.
And another impact of the biostimulant as well in the H2 as well.
Got it. So biostimulant and the overall dull period for the month of October, so that might impact our services and growth.
Right.
Yeah.
Yeah.
And sir, so sir, in terms of royalty, so earlier we have guided royalty only for the H1. I think for the H2 our royalty income will show. So how much we can look for the number for royalty income in H2?
You see, last year also royalty income was there in H2. So this year it is really difficult to calculate, but we are expecting slightly better than the last year, not significant better.
Understood. And sir, in the 2Q, we have received royalty a bit lower number compared to the 1Q. Is it because of the slower growth in the LATAM market, or is it a link of the royalty to the LATAM market growth or the global market growth?
See, that calculation is usually a little complex. The royalty depends on the price we are realizing. So at times the realization price is impacted, the royalty is impacted. So in Q2, yes, some is part of business volume and some part of the realization. So the entire number will be reconciled at the end of the year.
Understood, sir. Thank you. Thanks for clarifying all this. Yeah.
Thank you. The next question is from the line of Bharat Gupta from Fair Value Capital. Please go ahead.
Hi, good evening, sir. Just a bookkeeping question. So can you quantify with respect to what has been the sales return during the quarter?
Can you repeat the question?
What has been the sales return for the quarter?
Sales returns for the quarter.
Sales return has increased in the quarter significantly as compared to the previous year because of the continuous rains. Now, whatever we have sold basically particularly in the segment of herbicide. So herbicide material, the herbicide return has increased significantly in quarter 2.
Any approximation, like in terms of percentage of sales, what will be the figure?
In terms of percentage of sales in H1 is around 2% increase of the sales, as against 11% is around 13.5% type.
Overall 13.5% of the overall sales, right?
Yeah.
Okay. And sir, with respect to, like you also mentioned that there will be a stretch with respect to the collection cycle. So can we see that there will be an increase in the overall working capital requirement for the financial year?
Well, that may not happen because we'll be kind of managing our working capital really up close and tight. So, may not be.
Sure, sir. These were my only questions. Thanks.
Thank you.
Thank you. The next question is from the line of S. Ramesh, an individual investor. Please go ahead.
Good evening and thank you very much. So if you look at the buyer impact, when do you think we can reach the normalized revenue run rate? Sometime in the first quarter, second quarter next year? And in terms of the cost, would you then expect the operating leverage to increase the EBITDA from the buyer molecules next year?
So two parts of the question. First part, next year we are definitely expecting the revenue to start coming in Dhanuka books for most of the countries. And with respect to the operating cost, once we shift the production to India, definitely there will be some operating leverage. It's difficult to quantify how much at this stage.
Okay. So if you look at your margin profile, and of course there is some negative impact because of the herbicide return. So how are you seeing the current Rabi prospects actually see demand from the dealers and customers, given the good soil moisture and the northeast monsoon? And if you assume normalized season next year, would you see an improvement in the growth rate for FY27 over the full year, assuming that all these seasonal negative impact we saw in the first half is evened out next year? How do you see that?
Yes, the negative impact of Kharif would have evened out probably by another month, and we are looking at a really upbeat Rabi to begin with. And then, of course, the macros of the Indian economy, especially the rural economy and the agriculture ecosystem, is like really positive. So we are looking forward to a great 26-27 in any case. We are committed to our investment.
Yeah, so can you also then... Sorry, yeah.
So we are committed to our investments, we are committed to a growth plan, and we are committed to bringing in new products as we move forward.
So if you do some crystal ball gazing, obviously this year you see some attrition in margins. So assuming all these positives kick in FY27, including the buyer ramp up, can we expect the margins to possibly go back to FY25 levels and 20-21%? Is that possible? Or will it take slightly longer?
Ideally, it should be. Still a bit too early for me to answer that. I am looking forward to have you again in our February call.
Okay, fair enough. Thank you very much, sir, and wish you all the best and the best of season. Thank you.
Thank you.
Thank you. The next question is from the line of Viraj from Simple. Please go ahead.
Yeah, hi. Just few questions. So if I look on an annual basis, what will be the contribution from bio and PGR products?
Biostimulant, which are, you see, banned as of now, their impact in the annual basis would be around 2.5% of the top line.
Roughly, both bio and PGR plant.
Roughly, the impact would be, negative impact would be around 2.5%.
No, I'm just asking about the total contribution from this category for it.
Around 8 to 10%.
8 to 10%. Got it. Second question is, if I look at the current quarter OPEX cost, right, it's largely been sticky despite the drop in sales especially in the B2C. So just trying to understand what is the reason behind that. And, in the presentation also, we talked about quite a good success in terms of the scale-up for digital communication and good coverage there in terms of viewership and, mindshare. But what kind of investments we're making in the digital space if I have to look on an annual basis?
So we are investing, we have kind of diverted some non-digital investments into now digital field. So we are ramping up our Instagram, Facebook, and WhatsApp communications. We are also present and visible on YouTube. We are doing YouTube launch, live Facebook launches for our customers, and we are able to, kind of rope in diverse audience for such launches. What we could not mention and is a separate communication as well is farmers are joining our Zoom meetings for farmer training programs. We are inviting scientists from KVKs and university to conduct farmer training program on the platform that we specially create for them. So all this is really working out, making it easier for us to reach out to the next generation and the younger farmer who is looking for education and knowledge on this platform. And we are going to continue to do that and ramp it up further. We have, as of now, not kind of bifurcated the absolute investment amount here, yet we'll be doing that. You can probably consider it a small single digit, few crores.
Okay. But in the OPEX cost for the quarter, it's largely been flat despite the drop in sales. So any one-off there? I mean, I'm just trying to...
Yeah, you see, the expense is flattish in the sense that there are certain head where the expense is increased, but because there is a decline in sales, so there is a significant reduction in the freight and cartage cost and the C&F commission. But increase in the advertisement, publicity and other expenses, there is increase. But overall marketing and other expenses appears to be flat.
Okay. Just last question for you, Mr. Dhanuka. See, a few quarters back, we talked about us evaluating, whether we want to have a much more larger play in the ag input value chain. So we started with, we have been doing the domestic B2C and then now with export and even the B2B domestic business, the cash acquisition will just keep on increasing year by year. So any thoughts we now have formed up in terms of what we want to do in terms of Dhanuka's play in the broader ag input value chain?
So we have, kind of done a backward integration with our Dahej plant where we started manufacturing second active ingredient also. We have increased at Dhanuka our B2B and then export foothold. Then we have acquired 2 brands and global rights from Bayer Crop Science for Melidido and Triadimenol. Going forward, recent past, we have also worked very closely with Internet of Things, agriculture-based startup, which we are kind of recommending and promoting with horticulture crop for growers and farmers. We are working with a drone startup for delivering spray as a service to the farmers of Punjab, Haryana and Karnataka. And of course, going ahead, there are many more opportunities for us to explore and upgrade the value that we bring to the Indian grower and the farmer in the country. So hopefully things are looking up to a positive and a better situation with really strong macros out there and a strong balance sheet to support.
My question was largely, so if you see the platform we have created, right, we have a very strong distribution platform, a very good capability in terms of the demand generation, good connect with farmers.
Sorry to interrupt. If you have a follow-up question, please rejoin.
Yeah, just one. This is the question I've been saying. I think it's not been properly portrayed, so I'm just kind of trying to rephrase it. So, the distribution platform is very strong. Farmer Connect is also, quite strong. And we have a very good capability and, in terms of demand generation. So do you think something of this can be leveraged, say, other ag input like seeds or, say, water-soluble fertilizers? Something of those extensions, is the other promoters now thinking of extending the portfolio to these categories also?
So yes, absolutely. Our market reach and our Farmer Connect can certainly be leveraged for other ag inputs also. We have consistently added some of the products to our portfolio. For example, 3 years back, we added Mycore Super, a mycorrhiza offering, which comes as a fertilizer category. Then we had just launched Verdor, another fertilizer category, plant nutrition. And we are also exploring few product addition and few portfolio additions as we go ahead. So the funnel, a robust funnel and a very strong funnel is in place with really good processes of sales, distribution, collection and farmer education. We are going to leverage this funnel strongly.
Thank you very much. Good luck.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, this was the last question for today. I now hand the conference over to the management for closing comments.
Friends, once again, I would like to thank all the investors and the analysts for your support and confidence in Dhanuka. Now we will connect with you in the new year 2026 with Q3 results, which we hope to be significantly better than Q2 results. As we approach the dawn of a new year, we extend our heartfelt gratitude and best wishes for a 2026 filled with health, prosperity and shared success. May the coming year bring renewed energy, bold opportunities and continued growth for all of us. I reassure our stakeholders that we are committed to the task of transforming the landscape of agriculture and farmers in India. India ka pranam, har kisan ke naam. Thank you and goodbye until next time.
Thank you very much, sir. On behalf of Dhanuka Agritech Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your line.